Hello, Maverick traders. Welcome out to your market roundup, October 23rd. Corey here with you. Let's jump into it. So, we're going to look at the markets and what news was meaningful. Obviously, markets continue to look at the rise in yields, and there's some key psychological numbers that we're approaching 5% on the 10-year and such. We're going to look at the markets and what's moving. Today was a little worse day than the equity market showed. It showed them flat, but actually, there was some weakness underneath the surface, and then we'll always try to highlight the next opportunities, bullish, sideways, or bearish.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so here's what I was referring to. If we look at equities, I mean, basically flat. Dow and S&P flat, NASDAQ flat, Russell 2000 down almost 1%. But below the surface, more stocks were selling off today than were rallying. Oil was down 2.24, gold flat on the day. The daily news, we seem to have this magnetic pull towards 5% on the US 10-year. Wasn't too long ago that you could take out a mortgage for 3%. Now the US government will pay you 5% over 10 years to borrow your money. And Chevron is buying out Hess in an all-stock deal. This is on the back of Exxon buying a buyout agreement for Pioneer last week. So the big oil conglomerates looking to acquire more oil assets. Advanced decline line, 2/3 of all stocks declining. Like I said, it was weaker today than what the equities show, just on the headline flat number. And the 50-period moving average, we've sold off hard this last week, and it's weakened. Last week, 75% of stocks were below the 50 MA. This week, it's 84. Again, we're in a bear market. We're in a downward trend, make no mistake. So as we look at the S&P, downward sloping trend line, lower highs, lower lows, and we just made a new low today. Make no mistake, my friends, when you say this stock or this market is making new lows, that is not bullish. When we look at the NASDAQ, same thing. We're down there at the lows, just barely pierced below the lows. Could we bounce for a few days? Sure, but ultimately, the downward trends persist, and if there's going to be an end-of-year rally, it needs to happen immediately. We're moving out of this seasonal weakness period of September to October. Usually around Halloween is when equities should start to bottom and get that year-end rally, so it should be happening relatively soon if it's going to happen this year. Like I said, the heat map shows it. There's more red on the screen than green, but the more important, the bigger companies, Amazon, Google, Meta, Nvidia, they were up. So 2/3 of stocks down. They did not cheer on the Chevron news. That stock took a hit on the buyout, and then financials continue to lag and underperform overall. As we look at highlights for bullish, neutral, bearish, we removed XLE from the neutral list. That one worked really well for a number of weeks, and it's still right around those prices, but we would get off of that. Then there's not as many bullish candidates. There's a lot more bearish. So on the bullish side, first I'm going to highlight AU. This is a gold mining stock. You have a little bit of a high base, kind of a choppy pattern here, but it follows a nice rally, and it follows a turn in the markets, a turn in gold, which has also moved back into an upward trend, a turn in equities that has pummeled to the downside. So if you're looking where there's pockets of strength, look at that gold, silver, precious metal space. It's one area where there's been some buying recently, and I could see that continuing. The next name is not really a buy, hey, rush out and buy it. It's Tesla. But I wanted to highlight it because it's a take profits on your bearish trades. It's a buy to cover signal. And the reason I say that is The news today was that the DOJ is investigating Tesla, and the headlines are really ugly and really quote unquote bad news, right? So the newer trader will say, well, horrible news, stock must get pummeled from here, and they'd rush out to short it. But what you should think is, well, who knew about this previously? Who knew, who caught wind of this, or, why was this already getting priced in, and so forth? This is an excellent place to short. And on the quote unquote bad news, and you plummet and you're down multiple percent today, notice how it reversed off the lows. This is a great place to cover your shorts. Now, if your strategy is to just hold the expiration, that's different. But if you're trying to time your entries and exits, I find too many people think that the market is, well, bad news. The stock has to go down. What's worse than a DOJ investigation of allegations of wrongdoing? Look, that's when stocks will often bottom. So why are you bearish in this stock? What are you hoping for? You're hoping for plunges like this to be able to take profits. So don't get sucked into the headlines. I think that's a good example of, if you're trying to make some timing short, anything can happen. Maybe this will go lower in the coming days. But if I were just looking at it from the standpoint of what would be the recipe for exiting a trade early, it would be that it blasts off, it's extended away from moving averages, it's getting pummeled, the bad news piles on, the stock plunges multiple percent that day. Okay, that's a perfect recipe on heavy volume. I'm going to take my profits, I'm going to exit that position, because now the bad news is fully getting priced in, and the path of least resistance might be for a bounce back. So don't be one of those that gets caught off guard by a bounce back that says, oh, the markets are rigged, this can't be rallying, there's a DOJ investigation. No, no, no. That was priced in potentially, and you need to be aware of that. Citigroup breaking down a bearish candidate, making new lows. You could substitute the symbol Citigroup with Bank of America or JP Morgan or PNC Financial or Schwab, or all of these financials. They pretty much all look the same, and that is bearish. First Solar, this is in a bear flag pattern. You can see the big plunge, the consolidation. Next expectation would be another plunge to the downside. So FSLR, another possible bearish candidate. Markets are in downtrend. Precious metals, some of that commodity space looks like the outperforming segment of the market. Thursday, we get Powell speaking. Friday, core PCE, which is the Fed's preferred inflation gauge. Earnings season is in full force. Amazon, Boeing, Chevron, Exxon, Google, IBM, Intel, all of these different companies reporting this week. Certainly a market moving event could be following. Certainly something that can move the markets on those types of reports, and that size of companies reporting this week. Have a great week ahead. Thanks for joining us. We'll see you next time.